Well, to me, that's what you're bringing to the table, right? Is the ability for people in TradFi and crypto, whomever, to create products around the expertise they have or products that they envision coming to market, without all of the hassles and
Right.
garbage
And,
that
and
comes
and if
in.
you look at the, in TradFi, if you want a market created, firstly, unless you live in one of like 5 cities on earth and are very well connected, you can't really do it. But let's
Right.
say you get past that hurdle. You are just going to sit down and talk about who you know the people in the market to be, how you might maybe value the product, perhaps the mathematical side, but that's about as far as you would go. And then you're really just talking to like liquidity providers, platforms, exchanges, banks, to make this thing happen. And the DeFi equivalent of that is something like Vega, which is to say, you don't want to think about like how you build something like Uniswap or how you build a front end. You don't want to think about like how to incentivize liquidity and how to get your smart contracts audited. You actually want to think like how are the cash flows calculated for this product? What risk model would work for managing this product? What parameters should exist on this market? And then you want something which is what Vega is for, to say, I'm an expert in those things. I can do those things with a few people. I can talk to all my buddies who can provide liquidity or can trade, and then I can deploy this market and have something like Vega take care of all of those standardized components.
Welcome to Mission DeFi with Brad Nickel, where we explore projects in decentralized finance that are innovating and driving our mission of financial freedom forward. Thank you for listening. If you like what you hear, please subscribe, rate, and review Mission DeFi and spread the word by posting a tweet to the show. All opinions expressed by Brad Nickel or his guests are their opinions and do not reflect the opinions of Black Knox, Material Indicators, or any other affiliated organizations. You should not treat any opinion expressed by Brad Nickel or his guests as an inducement to make a particular investment, follow a particular strategy, or become involved with any project. A project being featured on the show is not an endorsement of that project in any way. This podcast is for informational purposes only. Now, here's Mission DeFi with Brad Nickel.
All right. I am excited today to have Barney Mannerings from Vega Protocol, providing some really cool derivative trading capabilities to the space. And Barney is joining us from the UK today, and excited to have him on the show to tell us about what you're doing. Barney, if you could introduce yourself to the audience, tell us about your background, how you ended up building a derivatives protocol platform, and let's talk about what Vega does after that.
Yeah, absolutely. Great to be here, Brad. I'm Barney Mannerings, co-founder and CEO of Vega Protocol. We've been designing and building this since 2018. And
Wow.
I started my career back in traditional finance, building trading systems, derivative systems, pricing systems, risk systems. I got into crypto in Bitcoin reasonably early, so 2013, 2014. Little bit of mining, and also got in on the Ethereum pre-sale, which was where I started to go down the rabbit hole of the possibilities of not just decentralized money, but decentralizing, all the finance and smart contracts and applications you can build on top. I specifically decided with my co-founder Ramsey to start Vega when I realized that there was a disconnect between kind of the techie people building decentralized finance protocols and thinking about decentralized finance and the actual reasons people trade and people use finance. So we're sort of looking at the derivative protocol, looking at things out there and going, actually, we're not building the decentralized infrastructure we need to actually replace finance in a meaningful way. And there were some sort of big things back then, and still are in a lot of protocols, that sort of made it not possible to make that leap to sort of real world use cases. And it got me very excited to sort of realize that it was actually possible, look into the technology and discover that perhaps with my experience and my co-founder's experience and a team that we built, we would be able to do something meaningfully different and sort of move things forward. So that was really what caused us to start doing this. And as I said, we started in 2018, white paper, testnet, a lot of user research and validation, running things, improving them. And we're now at a super exciting stage. We've sort of cut the final release code for the first sort of mainnet version of the project. And
Wow.
sort of probably sometime mid-May, there should be trading on mainnet for the first time. So super exciting time for us.
That's awesome. And a long road. While everything else was going on, were you frustrated with not being out to market yet, or did you really feel like you were focused on building something substantial and just really wanted to make sure it was ready?
Yeah, I think, I mean, there's always frustration. Every project, it's impossible to estimate something complicated. You can try and pad an estimate, but then you always take longer than the pad. So the best thing to do is try and be optimistic and accept that in some way that you can't predict, it's going to take longer than you expect. And those ways just come about in the craziest of ways. We were building on Tendermint. We'd regularly find at that early stage that actually the bug that we thought we had was a bug and regression in Tendermint, because it really, those early days wasn't super production ready, and so you'd have to wait for a fix in their version, or
Wow.
you did do something else. You just find all of these things. And then the other thing, obviously, that happened was we had the DeFi summer. And as we were coming out with our testnet and doing those things, we also learned what the market wanted and what people wanted. And so, we kind of could launch a thing that was different to that, or take a punt on moving things forward even further and doing something way out there. Or we could kind of go, actually, let's make sure that we're aligned with what people want now and what traders and the people in the space are saying, and actually provide something that's going to be useful-ish from day one. And I think, all those things come together, and you start to talk to the users and realize what you need to do. We actually launched the mainnet. So we did a thing, it's sort of similar to, if you remember, Ethereum proof of stake pre-merge, where you kind of have this network that's doing governance and producing blocks, but nothing is happening until the merge. We
Right.
kind of did that. So we actually launched that network last year. So because we're an app chain, so that means we both have the application itself, but also a blockchain. So we launched the chain with the governance and everything else. And so technically we have been in mainnet, and you learn all the other stuff here. We've been super focused on the product and the trading protocol, but actually you've got validators and you've got stakers and you've got governance, and those things have to work really well and keep the network secure and performant. So your trading protocol is kind of ready, but then you're like, actually, there's all of these rough edges on the proof of stake network, and you're kind of like, well, we actually need to probably fix some of those, because that might come and bite us once there's real money on the system. So you kind of, the last year or two has really been about making sure it's polished, making sure it's going to stay up, making sure we bring on board the feedback from the early network and from things that were difficult. Validators there was things just like developer and operator experience for validators, and things that were just difficult for them to do under certain situations, like upgrading the code. And we realized that if you don't fix those things, and then you have a problem in mainnet, and it take the networks down for 2 days or 3 days or 4 days, that's not going to be good. So we took the time to try and get those things right, rather than sort of rush to launch and get the trading product out and then have too much risk. I think, in decentralized systems, there's always so much risk everywhere.
Sure.
There's bridge risk, there's smart contract risk, there's technical risk, there's the validators, there's the legal and regulatory changing environment. There's all these different things going on. And so the risks you can control, and then the things you can see and do something about, I think you sort of have to try and control and do that to maximize the chance that you get through that stuff alive.
Yeah, that's fascinating. I think you're the first guest I've had on the show that actually is doing an AppChain specific application. I've talked to people that are, Anchor and others that are building things in the space, but I've not encountered someone who's actually built for that. And I actually think it's a really exciting space to be in. What kind of went into and we'll get into the product itself here in a minute, but now you've got me on this tangent of fascination with you being an app chain. What kind of what was your thought process? Was it from day one you really felt like you wanted to be your own chain in this way, and that was the plan? Was it a performance issue? What were your thought processes in going?
Yeah, so I mean, as I mentioned, we looked at DeFi and we looked at trading and finance and said, okay, we want DeFi. And I don't think it was called DeFi then. And in fact, when the term DeFi came out, I sort of laughed. I was like, this is a silly term. It's never going to catch on. And now here it is. Everything is DeFi. So I was super wrong there. But we looked at what was being built in decentralized finance. And as I said, when I look at a trader, who I would have worked with building trading systems, you look at what they want. They want to do huge amounts of volume really cheaply. They want extreme predictability of like performance and fees. They want high capital efficiency, which means extreme performance on things like margin calculations. They want low risk on the sort of settlement aspects of things in the markets. And then you look at what you can get out of DeFi, and you're kind of like, oh, well, the liquidation is reliant on a liquidation auction, and sometimes those things go really weird and the outcome is strange. And then like your fees are kind of based on whether someone has recently launched a new crypto kitty. So like, doing a $10,000 trade cost you $3 yesterday, and now it's going to cost you $33. Like, and you go and think about how a trader is going to respond to that environment. and you're like, it's expensive, it's not capital efficient, it contains weird risks around liquidation that they don't really understand. And so you then compare it to like paying a centralized exchange, and you sort of realize that there's a lot of hurdles to move from one to the other. And you really have to be either all in on DeFi and a proper degen, or you have to have some reason you just can't use the other markets at all. And sure, there is a group of people that fit both of those categories, but we kind of felt actually that we can do better. And so when you start to design that system, what you figure out is you want fees to be based on a trading system. You want them to be based on the size of the trade, not like some kind of auction like Ethereum. And actually, the auction has two problems. One is it creates incredibly variable fees, and the other is that it creates much worse MEV outcomes. You know, the
Right.
MEV is still a potential problem even without that kind of fee model. With the fee model of Ethereum and other chains, MEV is a huge problem because you can literally pay to front run. So you realize that actually, given that if you make the whole chain a trading chain, you can simplify that by going, well, we know how to charge fees on trades. It's a percentage of the notional. And then you could make other parts, other transactions that the chain supports. You could use a different fee model for if you want. But because you know these are trading transactions, you can have a fee that's understandable for traders. Similarly, you can just effectively code into the compiled code of the engine, if you like, in the same way like Ethereum has signature verification compiled into the Ethereum node. You don't write a smart contract for it. The smart contract calls out to compiled code, so it does it fast. You can do the same for like a matching engine, right, which is the core of trading, or the risk engine that evaluates volatility and stuff. And you can make those things super fast and efficient. So you can offer high capital efficiency and the same amount of leverage or margin requirement that you might get in a centralized exchange. And the more you think about it, the more you realize trading is an unbelievably huge industry. And there's a reason why trading platforms in the centralized world are incredibly specialized. They're written in C++, they're not written on WordPress or PHP. They're fast specialized. And it's because there's huge amounts of money at risk and at stake. And by specializing them, you can be more efficient and better. And so we sort of thought that's obviously the way this will go. Like general purpose applications, smaller applications will be on general purpose chains, and shards or nodes or entire chains will be optimized to do very high speed compiled trading applications, and they will have their own fee model. And we sort of figured out that especially once you pull in things like IBC and other cross-chain things that are just beginning to develop, so you can sort of move your assets around, it just won't make sense to tie up the cost and complexity and speed of your trading platform by making it live on a general purpose chain with all the other stuff.
Makes complete sense. And look, I think that's going to become more and more of a trend, right? You guys obviously were early in understanding where the problems were existing in the current system. And so it does make total sense. And you and I talked earlier, I own with partners a company in the centralized trading space, right? Most of our people are trading on centralized exchanges. And the primary reason they do that is the speed and efficiency of what they get there. And those that have attempted to try to do things in DeFi have experienced all the problems that go along with that lag, the liquidation timing and price timing and oracles and everything that goes along with that. So I definitely can understand that. Of course, when you take that on, you were talking earlier about all the other things you have to take on, right? And that is, you've got to have people that want to support and validate on the network. You've got to build around that. But the cool thing is you guys have now spent several years building for that and growing for that. Have you all been able to build kind of a community around the app chain itself and getting people engaged and involved because you had something available to start doing and validating and earning on the network with? Do you find that that's helped to build community?
Yeah, we have, and there's been a few ways that's come about. Obviously, partly our early backers were reasonably high profile, and so we got some good early interest there. We did a coin list sale back in 2021, and obviously attracted sort of knowledgeable and educated people in the space who were interested in what we were doing, and a good number of those have stuck around as well. We have a very active Discord, and so it's 30,000+ Twitter followers who sort of come along. And throughout that, we launched a testnet, I think, end of 2019, early 2020. It was like private testnet at first, and then we opened it to the public. And then soonish after that, we made it an incentivized testnet, and we actually effectively, rather than doing a sort of Kusama type model where there's a kind of parallel token, we reward people in the main Vega token. But what we've actually done is continuously designed incentivizations which incentivize sort of three things. One is community building, one is learning, and one is testing. So At the same time, we can build a community of users. We can teach people about trading and how Vega works, and we can test the system and stress test it. And so we've been doing that since sort of 2020 sometime, and continuing to incentivize people. We just built a good community, and then once we sort of cut the final release code at the beginning of this year, and have been on the countdown to kind of that stuff hitting mainnet and trading beginning in mainnet, we ran 4 mainnet simulations, which were basically like a culmination of the incentivized testnet, where we actually had, I think, 10 different professional market makers providing the markets, fully external validators running the nodes in the network, and hundreds or thousands of people from our community trading and taking the volume on that, and all being incentivized with a few 100,000 tokens or whatever. So we really tried to recreate the mainnet situation, both technically and in terms of the feel of real markets, and they went phenomenally well. In double digit, and often doublings in numbers of participants from Sim 1 to Sim 2, Sim 3 to Sim 4. Incredible performance. At one point, actually, we stopped between, I think it was Sim 3 and Sim 4, because the performance of the network was turning out to be so good. We were generating like 30 gigabytes of data a day on the data node and the APIs. And we're kind of like, okay, this is going to be a problem, because no one's going to want to run a node that gets bigger that fast for this database. And our data node sort of serves up a database and API that's very similar to a centralized exchange. So interacting with it from a trading algorithm or front end perspective is really cool. But we're sort of like, okay, we got to like compress this data, or like reduce the number of events, or find out. And we managed to get it down to something manageable, but it's still produced a lot of data. But we went through all of that, and we've seen this stuff work now and not fall over in this sort of simulation environment, but it's been sort of very mainnet-like. So I think in the next few weeks now, the final part is to get that that community that we built over all those years and that's come along for the ride of building this AppChain, using it for real in mainnet very soon. And then, of course, the other thing we chose to do was actually, I think it was a good decision, was to say, we believe we can build the best chain and the best protocol for trading. What we don't believe we can do is be the best place for issuing new assets and other things. We're like, we're going to, if you like, partner or pair up with Ethereum. We're going to build a bridge to Ethereum. So our token is an ERC20 on Ethereum, and all the assets that people will trade on day one, all ERC20s on Ethereum by the bridge. So it's not like we're creating a whole new ecosystem of assets and other DeFi. It's we're aware of DeFi, we're aware of all the assets, but we're part of it. We're just building an optimization layer, almost like an L2, but very, very specifically for for trading and for derivatives.
That's brilliant. No, I first of all, I really love the idea of the power that having the chain gave you to incentivize people, and the approach that you guys took to targeting 3 main objectives with that, especially the training component of it. I think that's fantastic. And I never thought through the power that gave you to make this an app chain, not only from the perspective of the technical capabilities and performance, but also to actually get people learning and using and participating and testing, because you could incentivize them to actually provide the testing. That's fantastic.
And I think learning is hugely important, right? Because I think in crypto, and crypto has been degen since before degen and DeFi existed. People would get excited about a team and a project and go in and be like, maybe this is going to zero. And that's sort of fine. And especially with projects, you're backing a team you think is cool, and maybe it's like a Kickstarter, maybe it works, maybe it doesn't. But I think the risk with DeFi and finance is the number of risks and the understanding of like what volatility is. And like, even if you're right about this, the position you've got is 99% likely to be liquidated before you get to find out you were right and make a profit, right? Like,
right.
Those kind of things that you can only really learn by doing and understanding, and the kind of esoteric risks. I think people don't sort of necessarily always get the difference between aping into a project and aping into like a financial protocol where there's all these kind of financial risks that are very bizarre. And I think as much as we can do with our UXs and with things like testnets and incentivized testnets and whatever to help people understand that and give them hints and clues as to the risk they're taking and the products they're using. Like, this stuff is open, it's decentralized, we can't stop anyone using it. It's kind of free for all. That's the cool thing about DeFi, but I do think there's a bit of a responsibility to try and help people understand that stuff.
Yeah, absolutely. I want to get into kind of what Vega is and what it provides to the market. And also, I talked to you beforehand. I think that I frankly think a large percentage of people in DeFi and trading don't understand what derivatives products are. I think they pretend they do. And they don't participate as much as they could in these things because they don't understand it. And that kind of goes back to what you were just talking about. People who ape into something that really don't know what it is or how it functions. But before we hit that, and on the overview of what Vega Protocol is, I'm reading your Twitter bio for Vega Protocol, and this is fascinating to me. It says, decentralized infrastructure that allows anyone to create products and markets, be a market maker, or trade. I'm kind of curious, thinking about the AppChain as infrastructure for building all this, is Vega Protocol going to be providing kind of all the interfaces and then people can build products on top of that? Or give us the whole picture of Vega Protocol and the vision. And I'm really curious about kind of how that, because that's fascinating and also enticing.
Yeah, sure. So the way I sort of think about this is when you think of the life cycle of a product or a trade, there are a bunch of things that sort of have to happen. You have assets, you have cash flows between parties about those assets, you have trading instructions, you have order books, you have in DeFi and in decentralized sort of AMMs, you have AMM curves, liquidity, you have all these different things that interact. But there are lots of things that are the same regardless. I place instructions into the market. Sometimes those instructions result in trades. Those result in me having a position. That position is margin. My margin changes. My position is marked to market. My position is eventually settled, and I made or lost money, right? Now, kind of like you said about the sort of interfaces there, each of those different things, when for a different market, might have a different way of fulfilling that function, but it's basically the same thing. So when you look at the cash flows for settling or for marking to market, those cash flows are defined by the product. The cash flows you would see on an options product as the market moves are different than the cash flows you'd see on a futures product, for instance, or a swap. But they can be calculated. And similarly, the way you look at that product and look at the state of the market and calculate the margin everyone should be required to have, or whether or not they should be liquidated, that sort of requires a risk model, which will be different for an options product, for a futures product. But the interfaces you have to fill in technically are all the same. And so what we can do is provide this kind of extremely rich layer of components that can effectively sub out to those interfaces where they need to for the different products or markets, but can manage and run and maintain a market and maintain the positions safely. We can do things like atomic liquidation. So rather than some kind of liquidation auction that's subject to the Ethereum blockchain, we can go, we know all the data to know this should be liquidated. We have access to the funds and we can liquidate this position sort of atomically as soon as that condition changes. So we've built that framework that can do those things. However, we built what we have right now is an MVP. We have purposefully held off on saying, here is the way you can all write WASM code to fill these interfaces and all create your own crazy products, all create your own risk model. We've actually said on day one, we've hard coded a product which is cash settled futures, and we will later, not very much later, maybe a month or two, we'll bring in perps as well. And we've hard coded a sort of standard risk model for that type of product because we're focused on proving that the thing works in terms of being an execution layer for this kind of trading. The liquidation engine works, the risk engine works, the liquidity incentives work. And adding the bit where people can code their own on adds all the security problems of coding your own, all the performance problems, and all of the other kind of risks. So we're kind of taking a two-stage approach. The V1 approach is products are hard-coded. There are some early products, but they prove not only that this kind of approach can work, but they also prove that the framework that can eventually run any product that you code will be there. And then once we've learned from that and improved it and figured out what we got wrong, we will also later, probably sort of beginning to middle of next year, perhaps, we will bring in the effectively probably be WebAssembly WASM, where you can write your own code for the product or for the risk model and deploy it to the chain and actually code up an option or a swaption or a Bermudan swaption or whatever crazy product you want to create. But we just kind of want to do that in two stages because we think there's enough going on with the app chain, with all the other stuff, that just getting a simple product out and seeing people use it and getting feedback is the right approach there.
I think that makes total sense. I wouldn't have expected anything differently, that you all would definitely release products that people could start using and playing with and test everything that you're doing. And I think that makes total sense. Do you envision the folks who are coming in to create products? So are you all going to be providing kind of a dashboard that then users can evolve and or click into those products? And so the people who are building with you have components like charts and standard fields, et cetera, that they can make use of? Or is this something where it's really a hardcore API? You come in, you create your own interface. Just kind of curious about how that would work from the perspective of people creating.
What we're trying to do is kind of standardize the API for creating products and standardize the data API coming out. So, our Vega console front end that we build is sort of eventually intended to be a reasonably advanced trading UI. The intention is for it to become very configurable. And
looks pretty good.
A lot of the data, it's good. there's a really interesting story behind it where the V1 we had used this library that allowed you to reconfigure all of the windows and panes and move everything around. And that library sort of became unmaintained and slow, and we had all sorts of performance issues. We had to rip that out. And so it's sort of become a little bit less configurable, but a lot faster and slicker than it was in V1. This is the V2 console. And yeah, so it's kind of, it's getting there. I think in 6 months, a year's time, it's going to be a much more advanced and even better trading platform, but it's definitely getting there. And this platform will take all the data. You can see it takes data like the candles. Every product with the market is going to have candles, right? It's going to have prices, so you're going to be able to do that. You're going to be able to see that. What we will find probably is that when people create really esoteric products with lots of data, and you can see the beginnings of this if you switch from the deal ticket to the info panel, you can see loads of info about the product.
I see.
Yeah, there you go.
Oh,
you can see all kinds of info about the products in the market, all coming from the on-chain data. So as people define their own stuff, there's going to be different data and risk models and Oracle data. And what you'll find is the stuff that's really the same everywhere, like candles, we can provide rich charts. And then the stuff that's like very esoteric, you might get some data in a panel like this, but maybe you've got to build your own components to view it. Equally, and because it's all on the same chain, every market and product anyone creates should be able to appear in console. But equally, if you created some kind of product that was very specific to a niche, you could create your own entire front end based on the same on-chain data, and you could customize that for your audience. Right.
Okay. I get it. But theoretically, I mean, if I'm building on your platform, I want to be where all the users already are. Right?
Yes, theoretically, everything's going to appear here. I mean, anything that appeared in your own front end would appear here too, which is
that's beautiful
beauty of it. And like one of the things I think of is the idea about very use case specific interfaces. So let's say that I had a thesis that people who import and export goods for sale overpay to hedge currencies. And let's say that what I was going to do is create a few currency hedging marketplaces, and then seek liquidity on Vega using Vega's built-in tools and incentives. But also, let's say that what I actually wanted, the thing I thought I was going to do was build a front end designed for importers and exporters rather than traders. So I could have this for a liquidity provider, they might use console like this. But for a trader, they don't, a non-trader, like someone importing stuff from Europe to the US, they don't want to see these candles and all this data. What they want to see is like, what is your liability? 100,000 euros a month. And they're like, how much this would you like to hedge? 80%. The price to do that would be this. This is the risk. This is the cost. It will be this many USDC. Connect your wallet, right? So you can have both the same marketplace underlying with the console for the pro traders, and then you've got this UX that's customized just for these particular types of users. So I think long term we'll have something like that.
That's brilliant. And look, I mean, already I was thinking about this from the perspective of what you're building on the ability to create products. Now it's funny. I've probably done out of the 100 or so interviews I've done in DeFi, I would say a good 20% of the founders were people who came in to build an entire platform because they came from TradFi and had expertise in a particular type of product and market, right? And I can bet you that most of those people never wanted to become people building an entire protocol. They wanted to put a product to market and utilize the experience they had and the connections they had to bring people in to utilize that product. Well, to me, that's what you're bringing to the table, right? Is the ability for people in TradFi and crypto, whomever, to create products around the expertise they have or products that they envision coming to market without all of the hassles and
right. And if you look at the, in TradFi, if you want a market created, firstly, unless you live in one of like 5 cities on Earth and are very well connected, you can't really do it. But let's say you get past that hurdle. You are just going to sit down and talk about who the people in the market to be, how you might maybe value the product, perhaps the mathematical side, but that's about as far as you would go. And then you're really just talking to like liquidity providers, platforms, exchanges, banks to make this thing happen. And the DeFi equivalent of that is something like Vega, which is to say, you don't want to think about like how you build something like Uniswap or how you build a front end. You don't want to think about like how to incentivize liquidity and how to get your smart contracts audited. You actually want to think like, how are the cash flows calculated for this product? What risk model would work for managing this product? What parameters should exist on this market? And then you want something which is what Vega is for, to say, I'm an expert in those things. I can do those things with a few people. I can talk to all my buddies who can provide liquidity or who can trade, and I can deploy this market and have something like Vega take care of all of those standardized components.
Yeah, absolutely. And then, I mean, I think then the only hindrance is how do you make onboarding easier for non-crypto people that may want to play in this market? But I'm sure that's something you guys have been thinking about anyway.
Yeah, and I think that one's an ongoing problem for all of DeFi and all of crypto.
Yep.
I think the thing I can imagine, and I think maybe something like compound treasury is a bit of a model here, which is like you kind of have people set up a company which sort of provides an intermediary and actually allows people to trade as if it's a TradFi product, but it's backed by DeFi. I can see that happening maybe early on in the first move of this. And then I think as that matures and as the demand is shown, then bank accounts and banking and even the regulatory environment will get to a point where connecting USDC from your corporate bank account in order to do these kind of things will become something that's much more doable. And at that point, you're really just integrating straight to something like Vega. So I think there's a few steps to get there, but I think one of the good things is lots of people are trying to figure out those problems, and many of them think about it more than us. So I think our job here is to build a good enough platform that those people want to integrate with us and to help them, sort of feed their requirements back and forth.
Yeah, it makes total sense. And look, I mean, companies like Plaid and Stripe are all starting to onboard crypto and make that easier from
exactly.
API
And I think the part of it is going to be the product. Like if someone came and created that FX product I sort of speculated about earlier and could actually say, 20% of small businesses could hedge FX, 30% more effectively and save this much money a year. You start to find those people like Stripe and Plaid and whatever who are going to go, we want to help connect these people because they're going to save money and we can see the value. And it's kind of, you got to show them that value.
Yeah. Well, and so, look, I don't want to go too crazy, but it seems to me, you all are positioning yourselves. And I actually love that you spent 5 years building this now, that I really think through what you're building here, because this is, my mind is starting to wander into a number of different fields and territories and ideas for this. So anyway, I can see you having a tool that makes it very easy for TradFi people to come and translate what they're already doing or new ideas they have into this product. I see one of the things I rant about regarding the regulatory space is the fact that I think we missed the mark on how we frame our messaging. So we spend all of our time talking about, please don't regulate us, when in fact, what the blockchain provides is a superior financial system with transparency and capabilities that actually makes it safer, to my mind. And so I think a project like yours is beautifully positioned to bridge the gap between folks who are curious, that are in the TradFi space, institutional space, whatever, and also people who understand the value that could be built here. But you make it so that they can actually see it become a reality, right? You're not saying, the average kind of TradFi build my financial application on the chain model is hire 10 Solidity developers, figure out how you architect this thing, figure out how you get it to market. You're coming to market with a platform that says, you don't have to have that. We're going to give you the ability to build what you know in this world. I think you become a really valuable bridge into TradFi and institutional.
Definitely, that's
from my
hope.
perspective.
And I think I look back. You look back at say the .com boom, and one of the things I remember from that crazy time was like, to start something, you needed enough money to buy like physical servers, and you had to like rent rack space, and like starting something was expensive and hard and really difficult. Whereas now you've got AWS, you've got Heroku, you've got all these different providers. You kind of like write some code and push a button from your bedroom, and it's probably free for the first 6 months anyway.
Right.
And I think that's kind of like that difference you were talking about there. Like, the writing Solidity by hand for every new product, for every new market, like all of that, when actually all of these should be the building block. People talk about DeFi primitives, but then they're recreating them with every single product.
Every single time.
And it's kind of like, that's not what primitives means in my mind. What primitives means in my mind is all of those difficult, annoying, boring, fiddly bits are taken care of so that you're actually getting straight to the value, coding up and providing that value and deploying it rapidly.
That's beautiful. Yeah, I'm actually really excited about what you're doing here. This is really cool. Really, really cool concept. Okay, let's talk about, if you would take a little time to give listeners that aren't adept, and I'm sure all of my listeners are experts in every aspect of financial products, but I'm curious if you would mind kind of taking a high level view of what derivatives are and what the products that you guys are going to be releasing for kind of showcasing what this thing can do. And let's kind of like maybe tweak the curiosity of people to start thinking about what can become possible in these kinds of products, if you don't mind,
Yeah,
and
sure.
talk about that.
And the fun thing about derivatives is that they're almost everything and they're almost nothing. And what I mean by that is really in TradFi they're contracts, and in DeFi they are code. But they're just a relationship between various numbers and other numbers. So when you, in TradFi, when you sign a contract, it could say anything. It could literally say, you multiply the temperature outside by the number of cats that walk past your window, and you're going to pay me that many dollars, right? And then you could write that contract, and that's a derivative. It's a derivative of some very weird underlying, but it's a derivative. It's a contract you could write, you could sign it, you could trade it. Someone could bundle up a bunch of contracts that look like that, and then trade, a derivative of that derivative. You get these different types of securities and derivatives that people would create in the TradFi world, and they would always do that by contracts. So they would have standardized, sometimes very bespoke contracts like that, and sometimes very standardized contracts where millions of different traders are trading a contract that's exactly the same except for the price number or whatever. But the cool thing is, because it's just a contract, you can write anything you like, which is incredibly powerful because it is very different to trading physical assets that you have to move around.
Right.
And the simplest type of derivative, what we call sort of delta one derivatives, are derivatives that kind of mirror or follow the underlying asset. So that could be, sometimes they're synthetic, so they literally are designed to be exactly the same as the underlying asset, a sort of synthetic version of that. So a version of that asset that isn't actually the asset, it's just a contract that's price moves with the asset. Then you get things like futures and in crypto perps, which are very similar to a synthetic asset, but they are actually settling at the price of the asset at a time in the future. And that can differ from the current price for certain reasons at times, and can be very similar. But those are the basic ones. And then you get the more complex and interesting derivative that people use to solve certain problems, such as options, which instead of saying you're going to buy this thing at the time in the future, what's the price of it? They say, well, how much would it cost to give you the right to buy that thing at that time in the future for this price if you want? And that's kind of cool, because it's like, if the price is below that price, you're not going to exercise that right. But if the price is above that price, you will exercise it, because you buy it for that price and then sell it. And so, you get swaps, which is like I swap the value of one product for another. So it's like, and swaps sound like a really esoteric, weird thing until you think, let's say you've got a floating rate mortgage. The rate on your mortgage changes all the time. You pay that back for your house, but it means that inflation goes up, interest rates go up, suddenly you're paying more for your mortgage.
Right.
You can do a swap. You can do an interest rate swap. So you can do fixed for floating. You can say, I currently pay a floating rate of, the current standard government rate plus 2%. What fixed rate would you offer me for the same period? And I pay you that fixed rate, and you're going to pay the floating rate whatever happens. And so you can switch from a fixed to a floating and back without actually changing your mortgage by using a derivative. And there's all kinds of, this goes on forever, but
That's amazing.
that's the fun thing. And so the other fun thing, obviously, is, well, the less fun thing, I guess, is that in TradFi, this happens in big banks. Liquidity is provided by entire desks of people who are paid hundreds of thousands of dollars a year. Getting new markets takes years and probably costs millions of dollars to do. And so innovation is very slow, and markets have to have a really high amount of demand to be worth creating. Now you take the DeFi version of that. We've just shown you Vega, where once you get past the sort of initial hard-coded release, you'll actually be able to code those products yourself. You'll be able to write that maths. We have the internet providing oracles and sources of any data you want for free or very cheap. So, and you can provide liquidity on things like AMM style liquidity, where you have passive liquidity, which again, at launch Vega won't have that. We're focused on order book, but we will bring in the passive liquidity as well. So instead of taking 2 years and $1 million and then needing to pay a trader hundreds of thousands a year plus a bonus to keep liquidity, you're like, I can write the code in half an hour in my bedroom. I've got the source of data there, and I can deploy 50K worth of liquidity just by putting it into a pool. Now,
That's
imagine
beautiful.
the innovation of people sat in their bedroom, sat at university in an economics course, sat in industry, seeing a need for a derivative to hedge some kind of risk that they see out there, and going, I'm going to make this because I can now. This is something no one could ever do before. And it started with DeFi already. People are doing that. But right now, when you want to do it, you're stuck behind gas costs on Ethereum, gas limits. How complex can your transaction even be? How much it costs to trade? How risky is writing Solidity? Who's going to audit it? What's the performance? All of those things. And the idea of something like Vega is to take away all of those considerations and concerns. So you just go, okay, I need an Oracle source for the number of cats that walk past my window. I need an Oracle source for the temperature outside. I need to know how to write a multiplication. I can do that. I can deploy that to the Vega chain, and then I can stick my 100K worth of liquidity into the pool and see if people want to come and trade my crazy new derivative.
That's awesome. That's a great summary too, by the way. I appreciate that. That's fantastic. And I mean, I think that I think kind of, we all have this vision of DeFi equalizing things for everybody. I loved the example of somebody selling the interest rate on their mortgage for something flat rate. I love the example of somebody having an idea and creating it, not having to be a powerhouse in the financial markets. And I think the kind of empowerment that your platform gives all sides of the marketplace is really amazing. That's fantastic. Wow. Um, okay, so so timeline is sometime potentially May for the initial launch with you said a couple of offerings in the console, and then when do you think and I'm not going to hold you to this date, but kind of timeline for when you're able to start recruiting some initial folks to build products in the platform?
Yeah, so yeah, as I said, probably like something like the 8th or 9th of May would be my best guess for when we cut the release. Because there's a live network right now and because it's all run by the community, not us, that has to get through validators testing it themselves, a network getting upgraded, some governance votes to upgrade and enable creation of markets. So probably sometime towards middle or end of May, the first markets will get created. And from right then, people in the community will be creating markets. And like I said, the product will be hard coded, so it'll be cash settled futures. So just these kind of like more simple synthetic Delta One style products initially. But you'll be able to do them on any underlying. Like if you wanted to come in and propose a market on the price of gold, you could do that. If you wanted to propose a basket market on the price of 10 different things, you could do that. And as long as you've got an Oracle source for that data, you can go create that market even from day one. So that's going to happen sort of mid to end of May. We'll probably see, I imagine people will create some of the most common markets that people trade in crypto early on, and then people will start to get more adventurous once they see what the platform can do. Over the course of the rest of this year, we've got a bunch of upgrades coming. We're going to add web browser-based wallets. At the moment, you need to download a desktop app for the wallet, but we'll have a browser-based wallet. We're planning to sort of use the new Snap functionality in MetaMask when it's available to even add Vega signing to MetaMask, things like that, to sort of try and make it easier for people to use, improve the UX and everything. We're also planning to introduce spot markets so you can swap assets for each other on Vega directly. We're going to introduce perps as well as cash settled features. So a whole bunch of different things onto the sort of V1 of the platform while it's still in this kind of like V1 hard-coded mode, if you like, this sort of easy mode. And then once we've learned a bit from that and seen how it goes, particularly how the incentive model goes, because I think the thing I didn't mention here, but one of the key important things is we're a decentralized open source product. We don't charge fees to us as a company or as a team, and everything is run sort of on chain and is run by the people who do it. So we really consider the liquidity providers and market creators as kind of like the owner operators of their own markets. Nice. And that means that most of the fee revenue goes either to the validators and the people running the nodes of the network itself, and then pretty much the rest of the fee revenue goes to people providing liquidity and creating markets. So and it sort of works a bit like being an investor. Like if you're a seed investor, you own, for the same investment, you own more of the company than a Series A investor, right? So similarly, if you create a market and provide early liquidity while it's small, you sort of own more of the fee revenue in that market than if you come in later and provide liquidity after it's grown. So that means that if you're a market creator, there's a bit of an incentive to come and create early markets. So that's going to be super cool. And then once we've sort of learned how all that's working and seen that things are sort of reasonably secure and robust and performing well, then sometime next year we'll open up those sort of interfaces to allow people to come and code their own products and their own risk models and make some of the more crazy and different derivatives products. But initially we're really focused on making sure the UX, making sure the performance, making sure the security and stability are there, and seeing how that first couple of products, but potentially an infinite explosion and variety of markets that can still be created even with those.
That's fantastic. Okay, I have 3 more questions. The first is, if folks want to start getting involved in Vega, they get excited about what you're doing, what can they go do today? What should they do today? How can they get engaged with you guys and start participating?
Awesome. Yeah. So Vega.xyz is our website. We have Vega Protocol at Vega Protocol on Twitter. We have a Discord, which is linked from the website, which is a very active community of people around the protocol. We have Fairground, which is what you're sharing the screen on there, fairground.wtf. That's our kind of incentivized testnet where our new features come before they make it to mainnet. And that's where anyone can connect a testnet wallet, get testnet funds, trade on the testnet, and play around. we have docs and stuff that you can see. You can access all the APIs. You can interact with the network yourself. You can even run your own data nodes and stuff if you want as well, to sort of have your own local data for Fairground, the testnet. You can also run your own data node on the mainnet. And then, as I said, sometime beginning of May, that mainnet's going to start getting upgraded. You can follow along on our Twitter, on our blog, and everything with that upgrade process. You can also follow along, and if you own tokens, get involved with the governance as well of the sort of that upgrade and the creation of new markets. And then, really once it launches and once you've had a go with Fairground and seen what it's all about, there will be a mainnet there that you can actually connect your Ethereum wallet, move assets across, and begin to try things out and start trading.
That's fantastic. I asked two questions of everybody that comes on the show. The first is, and I think you're going to be able to, you've been through a lot in 5 years, I'm sure. But I always ask, if you were reaching out to founders trying to launch something in this space today, or starting on it, what kind of advice would you give to them as they move forward, things that you've learned through this process?
It's a really good question. I mean, an absolutely ton of things we've learned, I think. Talking to users, I mean, it's the cliche, but talking to users is really, really good. Talking to users in as realistic a way as possible and listening to them will save you a lot of time, and it'll save you a lot of money and pain. And I think, the other thing I would say is, like, don't get too caught up or worried about the trends. Like, both you can get swept up in a trend and try and follow the trend, and then the trend dies and you get nothing. Or you can decide not to follow the trend and then spend 6 months worrying you made a huge mistake and you missed the market. And we did the latter. Like, we didn't do the former because we were building something quite complex, and actually turning the ship around would have been too difficult to follow, like DeFi Summer in and just ape into that as a project. So we didn't do that.
So the complexity kept you from doing that.
Sort of kept, but also, I mean, I think we realized it probably wasn't going to be the right thing to do anyway. But certainly, the complexity meant that it wasn't even something we could really think about doing. But then I did spend a bunch of that time going, have I got this wrong? Are we screwed? Yeah. And the answer was, like, even if it turned out to be a big trend, like, eventually you're going to catch up to it and it's going to be okay. So, and crypto is incredibly fickle, incredibly trend based, and every bull market has a bear market. Every bear market has a bull market after it. So I think, we very much realized that actually worrying about that trend that was going on and trying to figure out how to, like, reorient towards DeFi Summer or whatever was probably not as good an idea as figuring out what the users were actually asking for, what the overall growth trajectory was, and how that fitted into our sort of narrative and our product. And so, I'd say just don't worry too much about those trends. They will come and go, but if you've got a good product idea and if users are interested in it and want to get engaged, they will.
Yeah, look, I mean, everyone can fall victim to the shiny objects thing, but it is it takes a lot to realize and stick with where you think you wanted to take this thing in the first place.
The other thing I would say is bear markets are really good. Not for traders, but, like, in a bull market, you've got people shouting out on Twitter, every bank is stupid. Instead of bank accounts, you should be using our protocol. You can make 25% a year risk-free, right? And everyone thinks that you need to offer 20. We had VCs sort of turn us down or like question us, like, how are you going to offer 25% returns? I was like, we're not. It's not sustainable. It's not reasonable. We can't do it. And they're like, well, people won't use you because that's what the market's offering. And I'm like, well, those people may well lose a lot of money if they're not careful, and it won't be able to offer that forever because there's no such thing as that much free money. And, obviously at that time, it's like, had we launched and not offered that, there would have been some people who would have been more interested in the shiny 25% than something sustainable. But actually, that's the reason the bear market's friendly, because last summer, once we were more in the grits for bear market, a number of people came up to me at conferences like ETHCC and were like, we're interested in partnering, we're interested in knowing what you're doing, we're interested in building on your thing because you've been alive through several bear markets, you're doing sustainable things, and we think you'll be around in a year. So, it comes around. But I think the bear market for builders can actually be an incredibly good time to build a reputation, build some trust in what you're doing, and sort of do something meaningful.
Yeah, the fact that you stuck through this for 5 years and that you guys have built this foundational thing with a model that I think makes a ton of sense in the space. I mean, when you look at the pain points of performance, of developer shortages, of all of the things that surround this, bridging into TradFi and regulatory interference and all of that, I think it's very attractive to people to partner with you. and to shortcut what they want to bring to market, but also to realize that the way you've built it is more sustainable than many of the things that get produced today. So I think that's really smart. The other question I ask everybody that comes on the show is there someone you've been in the space pretty early? Is there someone in the space that you admire, that inspires you, or even a project and team that you really think is impressive and doing powerful things that you would talk about?
Yeah, I mean, honestly, I think as much as there's a lot of grifters and stuff in the space, there are also some incredible people doing all kinds of good stuff. I think, you know, on the DeFi side, the kind of, you know, quiet, we want to become boring and we want to become this basic thing of compound is great, and you know, Robert Leshner there, and people like Tarun at Gauntlet. But I think, you know, actually the project that I always come back to is Zcash, right? I think you look at like Zuko and Zcash and the community there, and they're not really getting bought into like 10xing or 100xing. They're kind of like, privacy is important. This stuff is important. We care about this. We're going to keep doing this. And they just consistently keep doing it. And I don't know if anyone who holds Zcash will ever make lots of money, if that's what they're trying to do. But I do know that if you want privacy preserving money, and if you want a community that cares about that, and is always going to stand by that, and is going for that, and is just resolute in that, and doing great job and sort of innovating forwards for a very long period of time consistently. I look at the Zcash community and project, and I will just always tend to be impressed by that.
That's fantastic. Look, I mean, it's a mission-based team, right? And they have one mission and one mission only, and they are willing to put in the work to do that. I think that's a great example.
I think it's a very important mission. You know, I sort of feel like there's like, you know, there's people who we have these like side missions of like, you know, life is good, so we can build these products that make our lives even better, or, you know, solve these pain points. But there's kind of like, there's something nice about actually, you know, there's Bitcoin tries to do a bunch of things and is interesting and good, but also is very flawed in some of those ways as well. And you sort of think, if the shit really hit the fan and you really had to like try and solve some society level problems, you know, and you had sort of autocracy or surveillance or whatever, you sort of think there are certain things like Signal and Zcash where they could be part of a toolbox, which is like, you hope you never need to use it, but having it there and having people working on it and building on it is incredibly important.
Absolutely. And the knowledge that they have gained and built out that will advance other people doing similar things in the space is also impossible to calculate the overall value, the kind of humanity there, right? So that's great. I love that. Barney, is there anything else we should know about what you guys are doing? I think we covered quite a bit. Are you going to take a vacation in June?
I might manage to get like 2 or 3 days to go to Glastonbury Festival, but that's probably about it.
That's great. That's great. Look, congratulations to you. I'm excited for this, to hear your story. You know, I wasn't aware, and so I really appreciate you taking the time to tell us about it. And I think your model and the way you're doing things has a ton of potential. And I have a lot of appreciation for people that persevere through their mission and what they want to create, despite hype of 400 other things in your face. So I'm going to take a much deeper dive on this. I'm going to encourage our community to do that, and look forward to talking to you further about what we might be able to do together later. So
awesome. Thanks, Brad. I think the only other thing I would say to people is like, reach out to the team on Discord, reach out to me on Twitter. We particularly value feedback. We particularly want to know what works well, what doesn't work, what you'd like to see, like especially front ends and stuff. You know, protocol wise, you know, protocols are kind of esoteric and sort of boring in a way, and as long as they work, but actually front ends and UX is really important as well. So like whatever feedback you have, whatever you're thinking, you know, reach out to us, let us know, and help us to make sure it's, you know, doing what you need and getting better.
Awesome. Thanks so much for coming on, Barney. Appreciate it.
Thanks, Brett. Been great to be here.